meeting. Thanks everybody for coming in. We've got Chris Miles coming to speak to us tonight. So this is So you guys in here can't hear any difference because the mic's only hooked up to the computer. There you go, tangling up in my own microphone cord. This is glamorous. All right, so anyway, so this is our first meeting. The group is dedicated to teaching people who want to invest in real estate how to start out with using their money from their regular income so that you guys don't have to get a second job or a hobby or a part-time side hustle gig, so that you can learn what Chris is going to teach us tonight about how to take your regular income and make that cash go farther by the way that you manage your money through the cash flow cycle. So he's going to teach us a lot of tricks to increase our cash flow and some of the accounts that we can use in order to invest in deal sponsors. And it's a place to bring active real estate investors together with people looking to invest, to partner in those, so that we have a place that we can network. And if you're looking for a deal, or if you have a deal and you're looking for a partner, we have a place that we can turn to and network there. So Chris is going to go ahead and get us started. Thank you so much for coming. We're going to be for about 45 minutes to an hour. And then we're going to network for a little while afterwards. If you guys have any questions, do you want questions till the end or you want them in the middle? All right, shoot out questions and you have it. Next month, we're going to be having a lunch and learn instead of the evening meetings at the same location with Thor Roundy. He's the one who owns the space. He's an attorney, a real estate attorney, and he's going to teach us about how to raise money in a way that is legal, ethical, so that when you're loaning money to somebody that they've gone about doing it the right way and how to protect your investment. And then we're going to go from there back to our regular evening schedule. We've got everybody lined up, so check out the meetup group for who's coming up, and we'll have some Facebook events added as we go along there too. So does anybody have any questions before we get started, or have anything to add? All right, so we're going to let Chris take it away. You have to talk into a microphone.
Hello. Awesome. Hey, is there a clicker for this? Or I just go click like the old school way? Oh, sweet. Can we do like the old audiobook things where it's like beep, when it's time to turn the page? That
Only if I get to do the Vanna
White. Ooh. Do. Like that. Okay. Oh, there it is. Awesome. Yeah, let's do that because I got to remember what I'm talking about tonight. So, all right. Well, hey, welcome, guys. I'm Chris Miles. I'm a cash flow expert and anti-financial advisor, which means I hate everything what financial advisors teach. So, are there any financial advisors just by chance? Just want to make sure. Okay. We don't let them in. It's VIP access only, right, to this building. So yeah, I actually started out doing that for 17 years ago. I started out being a financial advisor, did it for 4 years, and I realized one thing really quickly is that financial advisors are the brokest people you'll ever meet, right? They're kind of it's kind of like Warren Buffett says, Wall Street's like the one place that, people, clients that show up in Rolls Royces will take advice from people that show up on a subway, right? And that's kind of what it is. You guys ever notice there's really broke financial advisors out there trying to give you money advice? And I remember I had this turning point at the end of 2005. I had a friend that actually left from being a financial advisor to do real estate. And he said, I'm going to do this with my dad. And I said, yeah, good luck. Come back to me when you need money, that kind of thing. And I started talking to him at the very end, just right after Christmas. And I'm like, hey, so, how's that real estate thing going with you and your dad? Thinking, yeah, it's not working out. I wish it did, That's not what he said. He actually said the opposite. He's like, yeah, my dad, he's doubled his income from him being a professor down at BYU. And we're doing awesome. I'm like, that was 4 months. How in the heck is that even possible? He's like, oh, it's great. And so we got in this debate. What's better? Stocks, real estate, right? And we're going back and forth. And he finally just asked me, he said, Chris, what principles are you really teaching your clients? I'm like, what do you mean by principles? You mean Rule 72, right? The whole compound interest, because that's magical, because Einstein said it was amazing. Actually, he never did, but every financial advisor or network marketer will tell you he said that, right? So I can tell you're already in that company. So, and then he's like, no, that's not what I mean by principles. He's like, well, let me put it another way. How many of your clients are actually financially free from the investments you've been recommending? I'm like, I got that retired physician, but no, she's still broke. And she's still like freaked out about what the stock market does, right? And the crazy thing is, I didn't even put her in the stock market, but she still watched CNN. So of course, if you watch CNN, you're basically doomed, you know? I'm like, okay, so none of my clients are. He's like, well, great job, Chris. All right, how about this? If anybody's got it figured out, it should be you guys as financial advisors. How many of you are financially free, not off the commissions you're making from these investments that haven't worked, but actually doing the investments you've been recommending? And I thought, it's like none, maybe one. Later on, found out that one, when he got fired, was scrambling trying to find money again. He was just all facade, right? So basically, nobody was retired off of these investments. He said, well, there's your problem. I said, well, tell me the answer then. He's like, I'm not going to tell you the answer because I don't think you'll listen to me anyways. I'm like, dude, I'm going to break your kneecaps. You better tell me something. He said, all right, fine. If you're really serious, go get this Kiyosaki book called Who Took My Money, because I know you've already read Rich Dad, Poor Dad a couple times, but get Who Took My Money, which rips into mutual funds. And then secondly, listen to this radio show that these guys doing on K-Talk here local, you know, these millionaires that are on the air talking about this stuff. And so I did. And I started to realize over the next few months that what I was teaching was full of crap. You know, like the whole save everything, spend nothing, you know, invest for the long haul, high risk creates high returns, all that kind of stuff, right? And so finally, like about March of 06, I said, that's it, I'm done. I will never teach about, I can't teach about money and stay in integrity anymore. And so I quit. I said, I will no longer teach about money. I will only teach, basically I'll do mortgages and I'll teach ballroom dancing. That's pretty much it. And that's kind of what I started to do. Until it just drove me nuts that I knew there was guys younger than me that were retiring. You know, I was 28 at the time. I was like, there's guys like 25, 26 that are freaking millionaires. How are they doing it? And so I started to try to learn from them. And so that was March when I quit. By July that same year, I was able to retire. And I was like, crap, that was like way too easy. How in the hell did I do that? And I couldn't figure it out, right? And so finally I was just like, okay, I got to figure out what I'm going to do with my life, you know? And I was going to open up a dance studio. I didn't do that. And finally it led me to realizing I should teach. You know, it's kind of like, you know, not like the whole, you know, what was it? What was the movie? I'm trying to remember. I don't know. I'm looking at you. It was like, no, it was, it might've been Billy Madison. He says like, those that can't do, teach. Those that can't teach PE, you know, something like that, right? I can't remember, but anyways, you know, but yeah, like I started to come out because people kept saying, well, how did you do it? Like, there's something different about you. What is it? I'm like, well, I just did the opposite. And that's kind of the thing that I really teach, is that it's about cash flow, right? And that's really what I want to talk about today is, you know, what are some strategies to find more money? How do we create more cash flow and invest more? Speaking of which, how many of you guys are doing real estate investing currently? Just out of, awesome. How many of you guys are doing single family stuff? Multifamily? Flips? All the above? All right, awesome. I love this group. And it's funny because I'm actually also speaking a block away from here. That's why I like ran over from. There's a bunch of dentists over there that are also trying to learn about real estate and other investing and things like that. And so, seriously, no, I told them, I was like, hey, go on Facebook Live. You know, some of them follow me on Facebook or whatever. So I'm like, yeah, come on over, put down your food. So anyways, that's me. If you couldn't tell, that's my wife. My beautiful Venezuelan wife that I have, you know. It's funny because I Latin dance, but she has no clue what Latin dancing is. I'm like, you're Latin. You're supposed to know. These are 7 of my 8 kids from a couple years ago. I couldn't fit the 8th one in because it'd be an aerial photograph. So that's pretty much what you got there. So, oh yeah, go ahead and hit all of those things. So basically live in Draper. I'm, as you know, recovered financial advisor. I love real estate. I love investing in business. I love doing anything that actually will, you know, create real value in the world, right? And of course, you know, I was able to be blessed to be retired twice. You know, once in 2006, then I went through the recession, which was freaking awesome, because I went from millionaire to upside down millionaire, and went from you know, having lots of money to all of a sudden being $16,000 in the hole each month. And I'll tell you, that was like the best time because I learned so many experiences from that. Because 1, I didn't file for bankruptcy. I had to learn how to dig out of it, and then 2, you know, now I had to figure out how am I going to pay off over $1 million of debt and do it with no money and no credit. And so if anybody had to figure out how to like really get, you know, real scrappy, you know, during those times, it was me. And that's where a lot of my cash flow stuff came from. Here's the thing that I teach a lot. It's not about working harder. It's about working what? That's what they all say, and it's crap. Because they tell you like, hey, you got to work smarter. Well, here's the thing, like, what you did might not have known, although you probably guessed it by now, but my previous life, I was, and 40 pounds ago, I was a ballroom dancer, right? And I was actually one of the top amateur ballroom dancers in the country. But the funny thing is I didn't start out being that way. I actually totally sucked. I was horrible. Like girls would actually try to avoid dancing with me in the beginning days, right? But then eventually, because I just liked touching and dancing with girls, I was like, hey, this is pretty cool. So I kept at it and I got better. I learned the steps. I kept going and going. And then eventually I moved here to Utah, and I basically had to figure out between 2 different universities which one I thought was least stuck up. I went to that one. I won't tell you guys which one because you're local, but UVU. But I went to that one, and they actually had the world championship dance team that year. And so I actually auditioned and made onto that team. But here's the thing is I had an instructor. She said, Chris, you're good, but you're not great. Yeah, you know the steps. You've been working hard at it. You get all this stuff. But if you just change one little thing in your dancing, you can go from just doing well in competitions to actually placing in the top dancers. You guys guess what it was? Stand up and you'll find out. Everybody stand up. Yeah, get in here. Oh yeah. Ready? I'm ready. That's not the slide though. No. Are you looking for something?
Well, I wanted to find out what the answer was for the question.
I'm showing you. Oh yeah, stand up. All right. So how many of you guys have ever like done any kind of Latin dancing before, or ballroom dancing? You've danced anything before? You watch people dance. Okay, cool. All right. Hey, welcome. So here's what you guys do. So we're gonna do Latin dancing a little bit, but go ahead and put your heels together. Heels together and click 3 times. No, I'm just kidding. Put your heels together. Feet out about 45 degrees. Now, all I want you to do right now is just focus on breathing. So I think we can master this pretty well. So everybody take a big breath in and breathe out. Breath in and breathe out. Now take a big breath in, puff out your chest, and then breathe down. So you feel your muscles get tight. So now you almost feel like your rib cage collapse. Not literally collapse, but like get smaller. Okay, breathe again. And then now close that. Now this is all I want you to do. Now you guys at home on Facebook Live or whatever, you could totally do this too. Yes. Destiny is calling. That's really cool. You hear it. So here's what I want you guys to do. Keeping that center tight, right? All I want you to do is bend your left knee. Which knee? Left knee. Okay, and don't bend it out. Don't bend it like this because that looks kind of weird. Bend it just straight forward. So ready? 3, 2, 1, bend. Now what happened? Your hip popped, and some of you probably literally felt a pop. You're like, oh my gosh, that hasn't moved like that for a long time, right? Okay, now straighten both knees again. Keep this tight. Now bend the right knee and go. Okay, now straighten and bend the other knee. Straighten, bend the other knee. What's happening, guys? You are dancing. You're basically doing the merengue right now, right? That's all it is straighten and bend. Straighten and bend. Now, the only thing that made this different is before I would just do this stuff, but like this, right? And I would just be shaking it, right? And I would just imitate what I saw other people doing. By the way, have you ever known people try to imitate successful people and then suck at it? That's basically what I was doing with dancing. But I was doing it enough that people were like, well, they seem pretty good. So he seemed okay. But she's like, no, it's all the center. It's the core. She's like, you get this figured out, then when you do things like cha-cha, or whatever you're doing, you can like totally get it. And you get the arms and get the whole isolation and stuff with the ribs, and you do all kinds of fun stuff, right? And so that's where it all came from. Had nothing to do with my feet moving. In fact, if you notice, like I didn't have to pick my heels off the ground, did I? I just did this. It's simply because my hip had to pop out because I had kept this core, the center in place. And that's when I went from working smarter to working right. And then I actually started winning competitions. That's all it was. So, okay, you guys are great. Go ahead and sit down. Nailed it. Now, for those of you guys married, you are so in luck tonight. I actually had a mastermind with my clients flew in a couple weeks ago. One of them was like, you know, what'd you guys learn this weekend? He said, I've been practicing the dancing in my hotel room the whole time. I'm like, wow. And his wife's like, oh yeah, he's been watching himself in the mirror too. I'm like, do you like it? Oh yeah, I like it. I'm like, okay, that's cool. So anyways, how many of you guys thought you'd be learning any dance tonight? All right, one. Well, that's probably because you cheated. You looked at the slide, didn't you? So it's not about working harder or smarter. It's about working right. And that is the key. That's what makes everything easier. So now we can go ahead and hit it. The key is that we talk about acceleration, not accumulation. Because every financial person out there, what are they going to tell you to do? Throw your money in what? Savings accounts, IRAs, crappy 401ks, and all those things. Save it up. You know, let it compound and pile up in there for 50,000 years so you can hopefully retire one day. It's crap. And I can tell you because I've been able to retire twice. The last time I was able to be financially independent again was December 2016. Took a little longer trying to come out of $1 million debt, right? So second time around, that's how it was. It was always about acceleration, not accumulation. It's about cash flow, right? So beep. Just want to do that. So stewards win, spenders and savers lose. So what do I mean? So here's the thing. Spenders, what do spenders do really well? Yep, exactly. That was easy. How about savers? What do savers do really well? They save, right? Here's the problem. They're both in scarcity. Because spenders over here, here's the problem they have. They spend it. It's easy come, easy. Yep. They got to keep making money, right? They keep making and making more, but they got to keep turning it. If they don't make money, then everything stops. Savers have the opposite problem. They're so hyper-focused on what they spend, you know, it's never enough. They can never pay off debt fast enough. They can never save up enough money. They can be like the optometrist from New York called me yesterday. She's like, got seriously $1.1 million sitting in cash. Like, I just don't know what to do. Like, I'm afraid to use cash because my father was a real estate investor, but he got cash tight. So now I'm like, so basically you're like him. He was asset rich and cash poor, and now you're asset rich and also cash poor, aren't you? Yeah, like I just have that stupid REIT that pays me 7% a year. I'm like, REITs suck. Get out of REITs. Like, they're horrible. Like, stop it. You know, I was like, that 1.1 can turn into way more than that. And she has a $150,000 a year goal. I'm like, you could get that this year in your situation. Conservatively, you know, really conservatively, we'll say 3 to 5 years, right? If she goes slow into it. But that's the thing. Like, savers can never get out of that funk. But in the middle are stewards. Stewards are basically investors. They're saying, how can I make the best use of this money? How can I multiply it? How can I make more with it? How can I be wise with it so that you actually spend money, but you also make it too? So you're kind of like a spender. You're actually willing to use money, but you're not willing to use money to just blow it. Does that make sense? And that has to be an abundance mindset. If you do this out of scarcity, it'll never work, right? And that's the one thing I keep running to people. They'll get the formula to get there mathematically, but then they're still stuck. They're like, wait, okay, now I'm there, but is it enough? Which, of course, was that a symptom of? It's scarcity, right? And so you got to address both the mind as well as the math, right? Beep. So yeah, savers don't get it. Just like our good old friend Dave Ramsey, right? Totally yoked with his own chains of craphood. And that's the official word for it. And I can say that because my wife was actually the first instructor from Utah authorized to teach his crap. And then she left it because she said, there's no way you can become financially free doing it. And she's like, and I've been to his house. I've seen his life. He doesn't even follow his own advice either, right? And so that's the thing. Like, we want banks to banks do this, right? They're actually the best stewards ever. And in fact, they're so awesome, they've taught us to do the exact opposite with our money that they do. Because do banks go and put their money and save it in there for 5 million years and do nothing with it? What are banks doing? Loaning out. They're moving it, right? It's about speed, acceleration, not accumulation, right? So there's two options when it comes to this. So this is one of the key things I want to talk about today. When it comes to financing anything, you can either, one, use your own cash, or two, what? Borrow it, right? If it's not your money, it's someone else's, right? Now, here's the key thing that goes with this, is that you're always paying interest. And this blows savers' minds, because savers, do they ever want to borrow money? Oh, no, they can't. Like, it physically almost hurts their bodies to like borrow something. They can't even borrow your tool from next door without feeling guilty, right? It's kind of like that. And so instead, it's like, no, how can we actually make this work? So when I used to be a mortgage broker, right, I did that in 2006. You know, oh, where'd it go? Yep, go back one. There we go. So I would show people at the closing table. I'll say, hey, here's the truth in lending statement. Here's how much you're going to be paying in interest over the next 30 years, right? And back then it was like 6%, 5.5%. So it would be double the number. Instead of like 300,000 mortgage, it'd be like 300,000 interest, right? But here's the thing, is that if you got a 4.25% mortgage right now, over the next 30 years, you pay the minimum payment. What's your total interest you're paying? $231,000. Isn't it awesome that I gave you the numbers? Makes it so much easier. Like, well, let me compute this in my head, right? Yeah, $231,000 and change. Now, here's the thing. What if you had $300,000 you could liquidate right now and pay off your mortgage? Your best case scenario, if you pay it off, is you save that from day one. By the way, throwing extra money on your mortgage, a total waste of money. You save hardly any interest, and guess who you're giving the money back to? The banks. Now, why would the bank tell you, hey, you know what, you should throw extra payments on. You should do biweekly payments. Or, you know, better yet, you should do a 15-year mortgage, and we'll give you a better interest rate if you do. Why do banks want you to do that? Right. Because what do they get from you if you give them, basically you pay off your loan faster? Yeah. How many of you guys would love it if all of a sudden you had renters that said, hey, I'm going to pay the whole year's rent up front. In fact, I think I'm going to pay year's rent up front every month. How many of you guys would love getting what you get every year, every month, right? Would you ever say, no, you shouldn't pay me that much? You'd be like, pay away. Go for it. Pay till you're 200 years old. I'm cool, right? You will love it. And banks are the same way. So what if instead you pay it off, you said, I'm actually going to not pay this off. I'm going to take my $300,000. I'm going to invest it in some crappy CD. And let's just say that CD is like 2%, right? Now, this is 4.25%. You put in a 2% CD, you put $300,000 there for 30 years. How many of you guys would bet that it's going to be less, you're going to earn less money, less interest over that period of time, over 30 years? How many think you'll earn more interest? How many guys are like, maybe it's the same? All right, next slide. Yeah, one more. What if you invest it? There you go, now next one. It's almost like I wrote this. There you go, 2%, $243,000 and change, right? Now, I know. Seriously? Okay, next one. I had to put that in there just for effect. Now, that was $243,000, but what was it? Now, go ahead and hit the next one there. So let's, okay, go again. Okay, go again. I was tired when I did this. All right, there you go. So 4.25%. What if you earn the same interest? $745,000. Now, here's the thing. You remember 4.25? Remember what it was before? It was like $231,000, right? How is it you're earning the same interest rate, but now you're earning about over $500,000 more with the same interest rate? How is that even possible? Yeah, it's good that we went past all the slides. It helped, right?
Yeah, I was going to say compound, but it wasn't. I didn't have simple.
Yeah. So compound is kind of like that snowball. It just keeps getting bigger and bigger, right? But what happens with simple interest on a loan, for example? When you pay a payment on a loan, what happens to the balance? It goes down, right? And does the interest rate change at all? No, because like some people say, yeah, the banks are going to screw me because they just put all their interest up front. No, they don't. It's just math. It's just because it has a higher balance. But as you pay it down, you have more and more of those payments going towards principal, less and less interest, just like on a car loan or anything else, right? Well, what happens, it has this inverse effect. The interest you're paying goes down while the compound interest goes up. So that's why at 2%, you still made an extra $8,000. So you didn't even earn half the interest rate, and you still beat the mortgage. Do you think banks already understand these numbers? Do you think they're manipulating like crazy right now? And by the way, with fractional reserve banking, they can loan out 10 times that amount of money. 6 times here in Utah, 10 times overall, unless it's the big 5 that we bailed out, which was a 40-time effect, right? You know, I know, cue eye roll, right? But yeah, like that's the kind of the thing is like, it's crazy. I mean, it's massive how much money they can make. No wonder they have the biggest houses in Salt Lake City or any city for that matter, right? They've got it. 6%, this is kind of cool. 1.423 million. Now you're like 1.2 million better just with earning crappy 6%. How many of you guys think you can at least earn 6% on your money per year with your investments? If not, you got other people to talk to, right? Keep going. 10%, 4.9 million. Go again. 12%, 8.7 million almost. And then check this out, 20% or no, 15%, $19.5 million bucks. Now, of course, you got to still take out the interest you paid on the mortgage, take out $231,000, you still are left with $19.3 million in the next 30 years. So is that incredible or what, right? So how many of you guys are like now in a rush to pay off your mortgage? Yeah, like it's ridiculous, right? The only people that do that are the ones that end up being broke, because I've talked to them. The people are saying, I just did everything I was supposed to do. In fact, I finished Dave Ramsey's course a few years ago. I'm totally debt-free. I don't have a mortgage, but I don't have any cash flow either. I don't have any income. Like, I'm still stuck working my job or my business forever. Well, let's break out of it. Like, you got to think differently. You got to think almost doing the exact opposite. And it's kind of like, you guys ever watch Seinfeld? How many of you guys have ever been Seinfeld fans, or, or at least heard of it, saw a commercial once? So there was one episode called Opposite George. Because how would you guys describe George? Is he a pretty awesome guy, or is he kind of a loser? He's a definite loser, right? Like, nothing ever goes right for George, does it? And it's always dramatic. But one episode, they found out while they're eating lunch, like, why don't you do something different? Because if everything that you've done is wrong, then the opposite would have to be right, is what Jerry Seinfeld told him, right? So that whole episode, George does the opposite. And his whole life turns around. He actually ends up getting the girl, he ends up making money, getting the job, landing the right job and everything. Like, everything becomes perfect because he did the opposite. And that's the same thing with money. You just do the opposite of what everybody else is telling you to do, who are all basically broke people, you're going to have better odds of success, right? All right, let's go ahead and get past this one. And past this one. All right, so beat the 401k. This is people's retirement plan right here. Their dream is to live on a small island. Well, there you go. All right. So here's the thing. I just did this like a few weeks ago. S&P 500 last 30 years has been 7.55% actual yield average. So you know how they tell you, hey, it's been 10 or 12% since 2000 BC, so you can trust us, right? You remember those kind of numbers, right? Total bullcrap. They're average numbers, but they're not actual yield. You put them into a calculator, try to get the right number, 7.5%. By the way, if you have a 401k, do you also have fees? Yeah. Depending on who you are, it's anywhere from, on average, at least 0.7 to all the way up to like 1.4+%. Some of them I've even seen been over 2% a year. So if you even get the market return, because you're like, I did the S&P index, right? Well, guess what? If you have 1.5% type of return, guess what? How much you have now? What's the net return before taxes? It's like, yeah, 5-6%, right? Exactly. All right, let's go to the next one here. Now it's actually less because the market went down the last week or two. So here's the financial advisor rule. They tell you to live on 2 or 3% a year. Who's ever heard that? Live on interest or live on less than the interest? It used to be they tell you, like the old financial advisor would say 4%. You guys ever say, like, you got to live on 4%? Well, the last 10 years, they're like, no, 4% is too much. 2 or 3, max. So do the math here. Say you actually get your 401k up to $1 million, right? You do that. What's 2 or 3% of $1 million bucks? Basically nothing, right? It's below poverty. It's $20,000 to $30,000 a year. So you just retired as a millionaire to live below the poverty line. You now qualify for freaking Medicaid and stuff, right? That sucks. If you get to 2 million, you're like, yay, I get to 40 or 60,000 a year. How many of you guys would love to live on 40 or 60,000 a year set? How many of you guys would want a little bit more than that? Right? Yeah, exactly. So it's just ridiculous. So let's go to the next slide there. So here's the thing. If you actually want to take a 6% return on a 401k, right? And you want to figure out what it would take to live on a $60,000 a year lifestyle with inflation and everything else, that is what you need to save per month to retire in 30 years. $8,800 a month. That's not per year. Like they might tell you, oh yeah, you just need to save $100 a month and in 40 years you'll be a millionaire. No, it's bull crap. The numbers never work out that way. $8,800 a month. So I decided to do a little comparison. And I even did a podcast episode on this too, because I had people all the time saying, yeah, but Chris, I get that match. How many of you guys have 401k right now? And how many of you guys get a match, 100% match? So, or 50% or something like that, right? Up to a certain percentage. They're like, yeah, but that's free money. It's brainless, right? That's what every employee will say, as well as HR specialists, because HR people are totally financial experts, right? They got this figured out. I had one HR person when I used to work corporate like 20 years ago, when she was selling the 401k plan, she's like, yeah, you want this because when you get older, you're not going to need as much money because you'll just live on less than what you do now. I was like, what kind of world does this woman live in? Oh, okay, she's in her 30s and she's got like one kid. Right. Like, I'll tell you, I have clients that are in their 60s and 70s. Never once have they ever said, oh, yeah, my life is getting cheaper. Right? So that's a huge issue. But people would say, yeah, but what's the difference? Like, what if I had, my 401k with a match? Well, what if you did? Let's say you had 25,000 401k or 25,000 in cash you could start with, and all you could say was 5,000 a year. Which, by the way, is that a lot of money, really? I mean, 5,000 a year to save, that's like nothing, especially in the real estate world, right? So I want to play total devil's advocate here. I want to be like the most broke like type of person that's trying to fund their 401k just by the minimum they can do, right? 25,000, 5,000 a year. Here's how they compare. By the way, anybody actually curious to see if real estate wins or not? I know you guys probably already know this, right? But there's probably some of you guys on Facebook Live that have no clue. So you're welcome. So 401k, 6 years, you would have 109,000. You live on 3%. That's $272 a month. We're partying tonight, right? Real estate, and I just did like simple 10% calculation, like 10% cash on cash ROI. How many of you guys already know you get better than 10% cash on cash ROI with your real estate? Right. So for you guys, this is even becoming more brainless, right? This is just 10% cash ROI, buying a couple single family homes, repositioning after 5, in that 6th year to buy another one, actually buy a duplex. So you basically have a duplex and one single family home. Cash flow is $1,000 a month, right? By the way, just out of curiosity, which one's winning after 6 years? And by the way, with real estate, were you getting the match? No, your employer says, good luck, have fun, right? No match, but look what's happening. Now hit it again. Let's see if this 5 years later. Now you got 206,000 in the 401k. This is assuming, of course, the market just keeps going up steadily forever, which we all know totally happens. $515 a month you can live on. How's that for an 11-year retirement plan? Or $29.50 a month. Kind of a big difference, isn't it? So now how many of you guys are not surprised by that stat? But how many of you have heard people say, yeah, but my 401k get a match, it's free money, and you really don't have an explanation for it. You're just like, yeah, it is. Well, there, I can prove by the numbers that a 401k sucks. That's the technical term for it. Sucky. Like vacuum cleaner. Like welfare. Like everything else that's government related. So, all right. Moving on. Okay, cash flow, no money out of pocket. You got 3 options. You got 4 options. All right, I'm just kidding. So 1, assets. You can use your own assets. I'll come back to that later. 2, banks or lenders. We all know this, right? We can go to banks or we can go to private lenders. Or even not even private lenders, just their own private companies to do it, or you can get private money. How many of you guys ever used private money before? Yeah, isn't it awesome? And by the way, isn't it like the dumber they are, the better? And I'm not saying like they're totally dumb, but like if they're like expecting nothing. In fact, how many of you guys have noticed if you try to pay them too much interest, they freak out? You guys ever had that experience? Yeah, what happened with that?
I was talking to someone said, yeah, I give you 12% interest. They're like, really? It made him feel uncomfortable. So I'm like, well, if you feel uncomfortable with that, I can give you 6. I can cut it in half for you. It was really weird to me to think, oh, I can give you less. And if you're happy with less, then I'd be happy to do it. But yeah, it was kind of an eye opener, just the people's mindset that they don't think they can get 12%. So
yeah, exactly. Yeah.
Bernie Madoff's whole system, whole pyramid was based off of an 8% return.
8%, that was it. And that seems too good to be. Oh, yeah.
So the first time we were approached to do a private loan, he told us he would give us 10%. It would take like 6 months. And we're just like, one of our best friends, scam. He's trying to scam us. We're going to lose our money. Because you hear 10% in 6 months and you think that they're lying. So we didn't do it. And that was 15 years ago. Just think where we would have been if we had known this then.
Exactly. Yeah, I'm part of a real estate mastermind group that we get together 4 times a year, and it's funny because they talked about like there's either coyote or there's sheep, right? The coyotes are the ones that actually expect good returns, like we all do, right? We're like, I wouldn't take anything less than 10%, at minimum. That's like my baseline. Is like double digits is my baseline, unless I get a preferred rate of return with maybe some extra stuff on it. But you're like, I want at least 10%. But they're saying, you know what? If you try to present that to the general public, they will freak out. You present 6% to them, they'll jump on it all day long and say, oh, that's great. Are you sure you can afford that? I'm like, I could afford 20. You know, like, that's awesome. Yes. Like, sure. 6%. I mean, and I'll tell you, like, that private money is like some of your best money ever. You actually getting people that don't expect much are awesome. You find coyotes, you're going to have to pay premium price for it. You know, you head over a block, there's guys with millions of dollars. They're dentists over there right now and orthodontists. They will want at least 8 to 10%. So sorry guys, like, if you want cheap money, it's not over there. But those guys are like, they're all coyotes. Yeah. Oh, it's called Collective Genius. So yeah, I don't know if you've heard of it, but. Oh, were you? Oh, awesome. So you know Jason Medley and all those guys. Yeah, great guys. So anyways, but yeah, like, that's kind of the thing, is that, you know, obviously, like, there's plenty of ways to get money. But yeah, if you ever get private money, just remember, you know, don't promise returns that maybe you would expect, you know, depending on who you're talking to. It just depends on the investor. But it blows my mind that people will be willing to accept 6%, 7%. I'm like, I'll do that all day. So let's go ahead and talk about assets a little bit more. So here's a guy, Henry. He's one of my clients down in San Diego. So this guy was like the epitome of saver, right? You look up saver in Wikipedia and his picture just showed up. This one right here. So I just copied. No, I'm just kidding. But yeah, he was basically just saying, hey, I got one rental property in California. He's got his own house. He's going to aggressively pay off those loans, just like we talked about earlier, right? Paying off his house, paying off the loan on his rental property, so he can be free and clear. So in 5 years at that, he would free up $5,000 a month once it's finally paid off. But here's the thing. I told him to do the opposite. I said, first off, that property you have in California kind of stinks. You can do way better than that. Instead, let's go ahead and actually sell that property, move that 1031 that into other properties, and let's go ahead and do a cash out refinance from your house. Which, for a guy who's been a saver for so long, you have to imagine like that's been a pretty tough conversation for him and his wife to have, is, hey, you know how we're almost debt free? We're going to totally do the opposite. Now we're going to cash out in total about 800 grand, right? But here's the thing. Just in 1 year, you get that extra 800 grand, even with factoring in the extra mortgage payment, $6,000 a month he can create right now, an extra $75,000 a year from day one. Remember, in 5 years, he's going to have to hit 5,000, but you have to pay forever with zero cash flow until that 5th plus year, almost 6th year, before you finally had them all paid off, free up the cash. But in 5 years, you have 10,000 a month. Here's another guy, Brian. So same thing. He had assets as well. He had like his 401k that he was putting money in. He's actually here in Utah. Had his 401k that he had about 100 and some odd grand in. And so he wanted me to project. He's like, all right, what should we do here? And he was also aggressively paying off his house and everything else. So in about 10 years, he would have had his house paid off. So I thought, let's calculate what your 401k might do with your match and everything else. He actually would have built it up because he was putting away quite a bit into his 401k. He was maxing it out every year, right? He would have about $952,000, which you could pull off $2,100 a month, plus have a paid off house, which gives him a total of about $4,200 a month, right? By the way, is that anything to be sad about? I mean, that's pretty cool. That's basically right there, 50 grand a year. He could free up in about 10 years, right? Now, here's what we did instead. I said, no, we're actually going to do a cash out refi, pull out 250 grand. We're actually going to get the money out of the market because markets suck, stock markets suck, right? By the way, I'm actually a guy who used to teach people how to trade stocks and options. I taught like 200 people how to do that, and I still think the market sucks. So if that tells you anything. His mortgage payment actually went up a little bit. It actually went up by a couple $100 a month, but still the net result in 10 years, $12,400 a month. Now, what do you think is better? 4,200, 12,400. What do you think? I ask such hard math problems. Yes, that's right. Yeah, even my 3-year-old is like 12, right? Exactly. I mean, it's like a no-brainer. But again, he couldn't see it because that perspective was all about save. And especially when you have all the crowds telling you to do the same stupid, crappy stuff. Sorry for you guys on Facebook Live. If you're from Utah, I just say crappy, so I apologize. But the same crappy stuff over and over, right? But the thing is, you can actually just get that money moving now. So that's why I love. That's the thing that actually keeps me from retiring, is that there's so many people that actually believe that that they're going to have to save their way, pay off debt, do the same old boring thing day in and day out when you could do so much more. And by the way, yes, even these numbers right here, using this, I mean, that's 10%. Again, how many guys think you could do 10% or better? It's ridiculous, right?
So is this loaning his money out at 10%?
Uh-huh.
So he didn't have to buy an apartment complex or we have to actually do any
No. He has an option. I like real estate. I would prefer him to do that because I actually don't think people should do lending a lot. What's that? Oh, yes. Sorry. Yeah, so okay. I was already replying to it. Say what you just said, barely.
So this isn't him buying any real estate or having any assets. He's just lending money to other people's deals at 10%. And so he doesn't have to get a part-time job.
Exactly. Yeah, it's a no-brainer. And the guy's only like 32 years old. I mean, how awesome is that? I mean, how many people I mean, besides us, some of us in here in this room, right? How many people you know they're like in their 30s that could potentially even retire before they're 40? I mean, even when I did it the second time, I was 39. And that sucked. Like that was hard. That was really hard to do. So that's the thing is like it's so awesome what you can actually create with that. So don't work harder, work what? Work right. So let's go ahead and open this for questions at this point. What kind of questions do you guys have? I wish I did give you those bullet points. That was a lot of stuff to cover in I think I did that in like 30 minutes. That's a record. I know. Yeah.
So I know a lot of people who are very into the stock market and I say, oh, it only does 6.5 or 7% at best, right? And their response is, I have some mutual funds doing 15 or 22%. And I'm sitting there going, well, some of my investments in real estate do that, but not, I'm not the world's best real estate investor. So what's the response there?
I get that question a ton, or that comment a lot. How many of you guys have ever heard that comment before, especially lately, right? Well, first off, my answer is always the same is, well, since when? It's like, okay, 13, 40% since when? Well, this year or last year or whatever. It's like, oh, okay, awesome. And some of them will think they're great, right? Like you can always tell like who's it's kind of like you can always tell who's swimming naked when the tide goes out. When everything's bullish in the markets, right? Everybody thinks they're a financial genius. But then when everything turns around, when there's an impending recession that's going to happen again, like it always does, that's when all of a sudden people are like, oh, maybe I was kind of an idiot. And the problem is we've had now almost the longest run of the stock market. I mean, other than 2015 was like a little negative 0.1 blip. I mean, really every year since 2009 has been up. So we got now almost a generation of people thinking, oh, well, the market's awesome. Well, let's just say, and the market has averaged like 13% for the last 10 years, right? You look at from bottom to top, right? Well, if the market, like I showed there, which is 7.5%, which is pretty typical no matter what period of time you look at long term, if it's been 13, 14% for the last 10 years, what do you think the next 10 years have to do to bring it back to balance again? It's got to either go flat at best, right? It'll go up and down, it'll go all over the place. But the thing is, it cannot continue that kind of momentum. So when they say that, it's like, great, that's a great time to get out. Not that by the way, for a disclaimer, I do not recommend you sell any mutual fund stocks or anything else. And these are not guaranteed returns that we're talking about here today. So there we go, I'm legal. But yeah, that's the thing. Like it's just ridiculous to think that that's actually reality for, the long term. It's just a short-term perspective. And I've been doing this stuff for almost 2 decades now. I've seen Y2K and what that did. I've seen, everything else in between, right? Between them and now. And so it's ridiculous. Other comments, questions? Yeah.
So I understand the idea of private capital. I use it a lot and have for a long time. What were the strategies that you used to catapult yourself out of your upside down million to a millionaire again, or whatever it is you are, or wherever you're at, not who you are, but where you're at. Everyone's on a different spot in their path. But what vehicles did you use? And I'm assuming you used other people's money to do that.
That's a good assumption. It didn't happen that way. But so yeah, so for me, so what happened is, 2008 and all that stuff was just a train wreck, right? And it wasn't so much that I messed up completely. Like I wasn't like overly aggressive. But I mean, I did buy properties that weren't cash flowing well, and I didn't care because everything was appreciating, right? So I had bad cash flowing properties and stuff. I also came out of retirement to start coaching people, right? Because people were like, how'd you do it? And finally I was like, I want to teach. I was going to do it on my own. And then if you guys know a guy named Garrett Gunderson, I actually started a company with him and we did it together. But the problem was everybody we were focused on were real estate investors in 2007. So all of a sudden our market went broke, right? He was writing a book at the time, trying to get Killing Sacred Cows to be a New York Times bestseller. It wasn't becoming a bestseller overnight. It took a long time to get there. But we had no marketing, and I cut off my income streams because he said, hey, I want you focused here, even though I know I'm asking you guys to come out of retirement and you're basically starting your business with nothing. Like I was paying to start the company with him, and not even getting a paycheck from it really. And so between that was almost this perfect storm of like no income, bad cash flowing properties, and everything else was just hitting the fan, right? And so basically I had to go to a point where I almost had a trumpet, like Donald Trumpet, almost like what he had to do in the 90s. I mean, instead of him being like over $1 million in debt, he was like 900 million in debt, right? And so I started doing some of the same stuff. Like I reduced my expenses to just bare bones. I remember in 2009, it was actually end of April 2009. So it was almost 10 years ago exactly. I was in Highland and heard a knock on my door. Guy was at the door and he said, hey, I just bought your property down in Provo half hour ago. When can you move out? And my wife at that time, she's about to have her 4th kid. I was like, I can't be on the streets. Like my wife's like freaking like 9 months pregnant. And so I offered to pay him $2,000 to stay in the house, while we went and found another place, and so we ended up losing the house in foreclosure, losing almost everything. I turned in my car keys for my Mercedes. I just said, here, take it, 'cause you're going to call me anyways. Then I got collector calls and everything else. And so I basically spent time negotiating debts and stuff, trying to do that. That helped pay off a lot of it. Not all of it by any means, but that probably saved me a few $100,000 of that money. And then the next thing I did, I started focusing on my business more too. And so I said, all right, I have no money and no credit. Nobody would even trust me with money at this point, right? And so I was like, well, what can I do? And it's funny because I started out teaching people how to get out of the rat race in 2007. When I found myself back in the rat race, I couldn't be in integrity and keep teaching that, right? Because I mean, how many of you guys know people that teach stuff that they're full of crap? Like, I know you and I know some of those people too. Not to mention names. But yeah, like there's a lot of people out there that teach stuff that they don't practice themselves. And so I was like, what am I going to do? And so people would come my way. They're like, Chris, I would love to have you consult with me and stuff, but honestly, I don't have the money. Now, in the back of my mind, what I'm thinking is, okay, I guarantee they're not any worse off financially than I am. If I can get creative and try to find money myself and try to, find ways to free up my cash, I'm sure I could find money for them. And so I tell them, if I can help you find the money, would you pay me? They said, well, yeah, of course. And so I started like doing that. I started just focusing purely on how to find money, how to find cash flow. And I remember like even teaching like how to pay off debt. Like I don't teach people to pay off debt based on interest rate. I teach them to pay it off based on cash flow. So I knew I was onto something really weird and kind of cool when I told this woman, she was like fresh out of college. She had a credit card and she had a car loan. And she's like, I need to free up cash flow. Like I'm paycheck to paycheck. And I told her, I said, you're going to think I'm crazy, but you should run up your credit card and with the money you save, pay off your car. She's like, wait, you want me to charge up my credit card so I can pay off my car? I'm like, yeah, they'll save you $250 a month if you do that way. She's like, that seems crazy. You know that, right? I'm like, yeah, but it works. It's awesome. And so she did. And I started doing that with tons of people. And eventually like chiropractors and dentists started coming because I started creating more of a process around it. And then all of a sudden business boomed. And then of course business tanked. And then I launched and did my own business. I started Money Ripples about 7 years ago and did that. And in the process, as I started doing that, to get to your question here, right? I'm kind of giving you context because it wasn't like all like, yeah, it wasn't like all people like, hey, just give me money. It's all rosy. Because I did get, between settling and paying off, I did pay off about $900,000 of that debt in the first 3.5 years. So, that is kind of noteworthy. And that was purely all either negotiating down or paying with hard-earned cash, right? But the rest of the story is that, at that point, I realized that the mistake I made before the recession was cutting off streams of income. And so I said, how can I do this differently? And so I started integrating those back in. So I create a residual streams of income within my business. And then two, as I started to get more and more cash, then I started doing things like, turnkey real estate and things like that. And even with 4 years ago going through a divorce, which was freaking sucky, right? And that costs you half. That's like a 50% tax right there, you know. But even going through that, having to battle through that as well, and actually that was probably one of the. I'm not condoning divorce, just so you know. Like, I know we have happily married couples here, but for me personally, that was probably one of the best things that actually happened, because it actually allowed me to recreate my life. It was kind of like, you know, crash and burn. Like, compared to the financial tragedy, the divorce probably was way more painful for me, you know, especially with, you know, 6 kids. I mean, that sucked, you know. So going through that actually got me to rebuild and say, what do I want my life to look like? What do I want my business to look like? I stopped working 50 or 60 hours a week. I could only emotionally handle 5 hours a week for a few months. And then I got out of that. And then I kind of rebuilt it saying, I bet you I can work 10 or 20 hours a week just doing this right. And so I got really hyper focused on like cash flow streams. How do I create multiple streams of income, both inside and outside my business? And that's where it was seriously like about a year after my divorce that all of a sudden, bam, I was like, okay, my passive income and residual income's over 5 figures a month. Cool, I'm there again. So there's your long, drawn out, ugly, and beautiful story all at the same time right for you. The truth, yeah. Oh, by the way, just so you know, before I even hit that, when I was going through my divorce, I was even borrowing money from friends to pay for groceries. That was awesome too. Especially when I was paying 2 different house payments. That was not a fun time. So, cool. Anybody else dare to ask a question? No.
It's the same old question you probably always hear. What are you doing to prepare for the next time that happens? What'd you learn?
Yeah, I'm probably doing maybe like what a lot of you guys are doing too. I mean, I'm right now, I'm mainly, I'm still creating more income streams. I haven't stopped investing. I just heard one guy today at a lodge. He was saying, hey, I'm storing up all my cash for the next big thing. But the thing is, like, I mean, how many times have we heard people say, hey, the recession is right around the corner? Like, here, in full honesty, if you want to hear like a bad prediction on my part for the economy, I actually wrote a blog article. You can see on my website on moneyripples.com. I wrote a blog article 4 years ago called Y2K15, because I was like, hey, if you look at the patterns of the stock market, it's been 6 up years. We should have 3 down years, because it's like 2 steps up, 1 step back. It's the Wall Street waltz, and been doing that perfectly. So I'm like, Y2K15, it's coming up. And then end of 2015, the market went down 0.1% because it was a down day on the last day of the year, right? Otherwise, it would have been like even. I was like, okay, it's coming. And then 16 happened, and then Trump went in office, and everything skyrocketed. I'm like, I'm an idiot. I don't know crap, you know? And so what ended up happening, so, I mean, but I do see what's coming on now, so I don't wait. I still keep creating income streams, keep investing. But I am starting to store more cash, too, at the same time. Because whatever that next opportunity is, and you know, I don't know. It's seriously, I think the next recession would be something more like almost like an inflation or affordability recession is what we're kind of seeing. We're almost seeing like hyperinflation, even though the government says we're not. The thing is, we've all seen it. We've seen prices skyrocket, not just in housing, but everything is getting more expensive. But income's not going up at all. Like, it's going up like very conservative 2% a year. So it's going to get worse and worse for people. Even right now, when I consult clients, even the ones that make multiple 6 figures a year, I mean, they're still saying, man, like, we're both working just to try to have anything to save. So I think we're going to see more and more of that. That's my prediction. It could be totally wrong. So is this being recorded? They're like, hey, Chris was wrong. It's 2024 and life was horrible. You know, it was insects or whatever it was, whatever caused the next recession, right? But I think it's going to be more like an inflation type of recession, affordability type thing. So I don't know, storage units might be the next thing. I'm talking to those guys too. You use storage stuff? There's some good opportunities, especially when you're converting the stuff like, you know, converting even old commercial properties. You can buy them up cheap just by buying all like, you know, like old Targets or yeah, Kmart's and Toys R Us. I mean, there's already right. Yeah. Yeah, there could be opportunity there for sure. Even, yeah, especially if everybody has to downsize because they can't afford things, then that could be a huge booming business. But we'll see, right? Yeah. Any other questions? Comments? Yeah.
So with the real estate market similar to the stock market, the real estate market can have its ups and downs. It tends to be different in different areas, that the housing prices go up disproportionate to the incomes for the area. Do you have any advice as far as being able to identify those trends of what states are good? We heard Atlanta, Oklahoma have some benefits. South Dakota, North Dakota had a big push recently, and then there have been crashes.
Yeah, there have. It depends on. It kind of depends on what level of risk you're okay with, I guess you say, because like the Dakotas are like it could be a huge hotspot, but it's very industry based. So if all of a sudden industries change or a market goes down, especially with oil and gas and things like that, that could affect it. Yeah, Oklahoma City is a pocket I've seen that's been great. I mean, really what you're looking for is you're looking for low house prices with high income, right? So lately I've been seeing a lot more inventory coming out of places like York, Pennsylvania. There's been one. I've seen like Columbus, Ohio is still coming out with stuff. Kansas City's had some stuff. Birmingham, Memphis still has some things. I'm starting to see Florida show back up on the map again with some good stuff in Atlanta. You know, whoever said that. So there's some stuff in Georgia. So I mean, Southeast, there's a lot of good stuff there. But I mean, even starting to move up towards Midwest, almost Northeast, there's starting to be pockets too. Yeah.
So we just really started doing this ourselves about a year ago. And so in a lot of ways, we're still beginners, seeing, do these weird strategies really work? And we go and tell people how awesome they are. And I feel like they're all kind of watching us to see how it goes before they're ready to jump in. So I guess what advice could you give for somebody who's just starting down this path, maybe recovering Dave Ramsey, acolyte, and what's the best way for them to get started? I know for us, it was from Brian. He said well, I don't know. I'm going to say what you said and you would tell me if it was true or not. He said, go buy a house with a HELOC. And so we went and got a house with a HELOC, and we've been using that HELOC to kind of pay down our rental houses. And so it seems to be working okay, but we've only been doing it, a couple of months now. So what would be a good thing for a beginner who doesn't want to buy a bunch of rental houses, who wants to find one of those people to loan money to, or techniques to pay their stuff off? Where's a good place to start?
Home equity line of credit. Yeah. Start here, like right here in this room. I think that's a great way to go about, like, find other people are doing it. I think the hardest thing with beginners is that you think that if you try to do this thing, you're all alone, right? Like, how many of you guys actually feel like you're kind of like the weirdos of your circles? Unless you create your own circle, right? Like, yeah, and that's the thing. You create your own circle, and you have almost your own insane friends that you surround yourself with, and then you don't worry about the masses. And that's kind of the hard thing. If somebody's a beginner, I mean, something like this could help to see that there's real people too. I mean, not for a shameless plug, but my podcast is a great way to go too, because I mean, you listen, I mean, not just me, but even when I bring on guests, I mean, there's so many different ways to make money and to just do the opposite, right? It would be hard. Like I know with my world, I know a lot of you guys can feel the same way, is that you almost think, how can you not see it? But it's really is true. Like, we're just surrounded by such a group think, and everybody keeps thinking that they're all intelligent and they question everything, but then they're skeptical of you actually being successful, but their lives suck, right? Like, they're just barely making it. They're in survival mode. And so the best thing is just get that education, be around people that actually do it. I mean, that's why I started getting my clients together for masterminds like twice a year. It's like, hey, fly in, like, you realize you're not alone. Like, you're not just the only person that's, working in an IT company, the only IT manager that actually has, this kind of stuff going on. Like, you'll find a ton of other people. In fact, the number one industry that I have coming to me, besides like maybe like dentists or chiropractors and stuff, are actually IT managers. Like, IT guys are like looking for this stuff. That's what you do. So see, man, I'll tell you, like, IT managers, like, I don't know how many there are out in the world, but I think half of them work with me. Like, it's crazy just how many are doing it. But that's the thing, is like, you're looking for something else, Military people are another group of people that actually were begging for something like this. And it might just be some like simple lending deal, just starting out simple, where you turn money over and, you get a contract in place, and you do something like that. But I don't know. After seeing both ends, I'm not the type of person that myself want to go lend a lot of money. I'd much rather just invest it myself. But that's the one thing I notice with my clients is that everybody has their own different formula. Because I got one client in Hawaii right now, an anesthesiologist. He refuses to do anything with real estate. I'm like one of those guys. I'm like, I like control. I want to own and control property, and I know that there's recourse if anything goes wrong. I call the shots, right? So it kind of sounds like I'm a control freak, and maybe I am, but for him, like he's like, I won't do nothing with real estate, nothing at all. I'm like, how about lending deals? No, not even those. He's like, but I want to do oil and gas. I'm like, all right, cool. And then he goes out and he buys 3 random oil wells. I'm like, dude, like, all right, like that's great, but that's kind of like a hit or miss type thing, you know? And so I said, you know what, here's another group. They actually buy multiple wells. Go basically do funding with this fund instead, and you'll get paid that way. And it's like, at least do that, you know, at least you got like 17 wells that you're a part of instead of 1, you know, or 3 individual ones. But awesome write-offs though. So everybody's different. So with him, I didn't force it. I was like, no, I'm not going to tell you what you should invest in, what you shouldn't. Like, I'll just tell you the consequences or the rewards, and you do whatever you feel is fun. And so him, it's all oil and gas, no real estate. Cool.
Any other comments or questions?
Just wait till next time. Oh yeah, it's gonna get hot and heavy. Yeah.
Thanks so much, Chris. We appreciate you coming. So we can hang out for a little while, do some networking. We're gonna go through shout out your haves and wants, what you guys are looking for. If you have a deal or you have some cash that you need to invest in a deal, just get to know each other and know that this is the place you come, our Facebook group and our meetup group, to find people so that we can pool our resources in this network and get this job done. So did you have anything to add? What? Yes. So if you have haves and wants, I might have one, but I'm not sure I can. I have an apartment complex I'm looking to purchase in Pocatello. That's all the more information I can give. So
What do you need?
I'm raising. I can't even say.
Are you raising money for it?
Well, does the SEC say that I can say that? Can I wink? I am trying to buy an apartment complex in Pocatello. That's what I'm doing. I'm looking for partners. Yes. In Idaho, in Pocatello, Idaho, which I think is a super hot market to invest in right now. So anyway.
How did you phrase it? You're looking to what? Did you say you're looking? Oh, okay. I'm doing the same thing for a 56 unit in South Salt Lake City. Whatever she's doing. Full disclaimer.
I am looking for partners to partner on multiple deals. I'm actually turning away deals in Atlanta, Georgia, because there's so many deals and margins are amazing. So I'm looking for partners for those deals. So.
All right, Mike, thanks for broadcasting. Let's kill it. And we'll see you all for Lunch and Learn next month.